welcome back to the channel. My name is Broc. This is a time where earnings season starts to begin. This time where stocks make some big moves, up and down. You see a company report come out and they report profits, beat expectations, and still the stock drops 8% to 10% the next day, or maybe even more. So what gives? Why do investors keep losing money even when numbers look good? Today I'm going to break down why the psychology, expectations, and forward guidance that actually move stocks during earnings, and how you can avoid falling into the same trap that most traders and investors do as well. Let's get into it. So the first segment I'm going to focus on is expectations versus reality. The first thing most people misunderstand is that stock prices move on expectations and not results.
Calvin McDonald talking to us last hour. I asked him about the competitive landscape after the athleisure company disappointed on guidance in their second quarter print, also on the overall slowdown in growth in the U.S.
Wall Street doesn't just look at if a company beat or missed earnings. They look at what the market expected for the company, and most importantly, what is coming next. So if a great company like Apple reports great earnings, but investors were expecting a little bit better than what was reported, the stock can still drop. It's like getting a 95% on a test, still great, but when everyone thought you'd score 100%, they'd be a little disappointed in you. That's how the market works exactly. It's forward-looking. It's not reacting to today's numbers. It is also pricing in the growth for tomorrow. The second reason why stocks fall after earnings is forward guidance. This is when management gives projections, the future revenues, margins, and demand. Let's say Microsoft reports strong earnings today, but guidance for the next quarter, growth will slow from 14% to 8%. That's quite a drop. Just that single comment alone can wipe billions of dollars off the market cap of the company overnight. Then this results in analysts immediately updating their models, large funds reposition, which causes a lot of volatility. The average investor just sees great results in the news headline, which is very misleading. But the pros are already focused on what the company just told them about the future. Now another point to focus on is the emotions and crowd behavior. Now here's where psychology takes over. During earnings season, volatility skyrockets. Retail traders chase green candles while institutions fade a lot of those moves. Smart money knows that most people overreact. That's why you'll often see a stock drop right after earnings, and then you'll see it recover slowly over the next few sessions. That gives enough time for emotions to settle. If you understand the why behind the move, expectations, guidance, and positioning, you'll stop reacting and start planning. This is how you can trade or invest smarter during earnings seasons. So you can actually take advantage of this. Here's a simple framework to keep in mind. Number one, know the expectations for the business. Look at analyst estimates and recent sentiment before earnings. If a stock has run 20% into earnings, expectations are already through the roof. Number two, listen for guidance. Focus on management's tone, forward-looking statements, and margin commentary, not just EPS and revenue, which is the numbers that the company reports. Number three, wait for the overreaction. Don't FOMO in. Often post-earnings sell-off sets up a better entry point after the dust settles and the emotions have balance. And number four, track the trend. If fundamentals are strong but guidance is conservative, that can be an opportunity. The market often overcorrects short term. All right, in summary, so next time you see a company crush earnings but the stock tanks shortly after, don't panic. Ask yourself, what did the market already price in? What did management say about the future? That's how the professionals think. And that's how you stay one step ahead of the game during earnings season. If you found this breakdown helpful, hit that like button. Thanks for watching. This is Broc. Peace out.